Back everybody to the Nomad Hedge. In today's video, we will be taking a look at the Nasdaq futures and just to gauge where this market is headed. And so we're basically going to be taking a look at the technicals and the Elliott wave count. So without further ado, if you haven't already, consider liking and subscribing to this channel, and let's get into the video. So first of all, if we take a look at the Nasdaq here in a larger view, to put things into perspective, we can see here that wave 1 primary started right there. And then we had a wave 2 primary starting right there. So this cycle here is the beginning of a new, I would say, a minor degree. So we're looking basically at this 1, 2, and 3, 4, 5 to complete. Okay, that's basically what Elliott wave is. It's 5 waves up, and then we see the correction of this 5 waves, and then we start a new cycle as long as the bullish bias is intact. When we look at the primary view here, we can see that we don't necessarily want to break the lows here of primary wave 1. We can do that, but technically speaking, if we do that, it would be damaging to the outlook of the Nasdaq and the overall market. So preferably, we do want to test this level at minimum and then bounce from it and then start a new cycle here. Okay, so that would suggest we have completed this 5 ways upside move here, and we're starting a new larger degree after that. So the question now is, have we concluded wave 5, or could we see some more potential upside after this correction here has concluded? Our view here is that yes, wave 5 could have indeed concluded here, but we're also open to the idea that we have just corrected here to wave 4, and that right here we're just seeing a start of something bigger, mainly that this is a part of a 1, 2, a sub-degree, and that after that we can see the last 5 ways to conclude wave 5. Okay, so either wave 5 concluded here, or it will conclude at a higher level. So in order to understand where this market is headed next, I would suggest that you take a look at the retracement levels, especially the 0.618. Okay, so the reason why I say the 0.618 is because the golden ratio, the 0.618, is typically where you want to find support before resuming higher. If we're starting to break below the 0.618, then the odds increases that we're going to break the prior low here and that we're going to see a further correction. Now, if we're going to see a further correction, we could still call it a wave 3 here. Why? Because wave 4, the correction towards wave 4 could actually progress and be much larger than what the wave 1, 2 correction was, right? So there's also this theory that if the first wave 1, 2 correction was shallow, then wave 3, 4, the correction will basically be larger. What we could do, basically, we could measure where wave 4 could conclude. We're looking basically at the 100% extension here. So that would be at around 23,000, let's just say 23,300. Okay. We also have the 233 EMA right there, and we haven't tested this level ever since back in May this year. So this could be a level that the market is ready to test before proceeding higher. I would submit to you, and I would say, look for this 0.618 level here within this downside move. If we're starting to breach this one, then I would say that we're headed down to this 100% extension. That's basically it. Okay. Now, the worst case scenario is that this is in fact the conclusion of wave 5, and what we're seeing here is an impulse, a 5 ways impulse that could look something along the line of this, and that could be a prolonged correction. But again, I don't see this market heading lower below wave 1 primary. This is a level that I think we're likely going to retest before resuming higher and start a new cycle, basically. Either we're going to continue higher here and make that last push towards wave 5, and then we'll get the correction, or we're seeing the correction happening right now. Okay, so that is why I'm watching this 0.618, and if we're starting to breach this one, I'm going to aim for the 100% extension, and I know this will be a buying opportunity from this level. Okay, so you can plot the 233 EMA. So that's the exponential moving average, and it's based on Fibonacci sequence. So we're always looking at the Fibonacci sequence here. Again, just to be repetitive, the 0.618, and if we're starting to breach this level, look for this 100% extension, because that's going to be the most important level to watch. And this could offer a new buying opportunity, especially if you missed buying the breakout here or the lows right here. Now, we entered the market much lower. We called the basically this move here, and we started buying at these levels, and we started adding to our positions here once the 233 was breached. And now it's pretty interesting that the market is yet again looking to test this level, and that is why we think that this is going to offer a new buying opportunity if we're going to test it here. If not, watch for a new impulse here, a subwave to conclude wave 5, and that should then give us the correction. And we're looking for, again, perhaps let this 233 move up a little bit more, and that could be a level to test later on. So that was basically it for this video. I just wanted to give you a brief view here of how I view this market and what kind of levels to watch ahead. So if you like this video, consider liking and subscribing. I post a lot on X, so you can follow me there, and I'll see you guys in the next one. Take care for now.